What's up, Bat Fam? Welcome back to the Build a Trader YouTube channel. In this video, I'm going to be talking about trade management. Trade management is a concept that refers to managing your open trading positions while in a trade. It is similar to risk management, except that risk management more focuses on your risk, and trade management more focuses on how the trade is playing out, if it's going in your favor already, whether you need to take profits early, whether you need to hold, or whether you need to adapt and close the position entirely. If you are unfamiliar with the concept of trade management and want to include it into your trading strategy, stick around to the end of this video. I'm going to show you how I manage my trades, as well as show you guys some examples of last week's trading and what I did to manage those trades. I'm going to hop on the charts. I will see you guys there. Alright, Bat Fam, here we are on the charts. I'm going to show you those examples on Euro USD on how to manage your trades for a scaled in position, as well as close a little bit earlier on trades so they don't hit your full stop loss. You recognize the candle patterns and the price action isn't going in your favor. So here is the first example. I scaled into this trade on Euro USD this week, expecting this bullish move. So I was expecting this move right here where I'm clicking. That happened to hit 1.05700, but where I had entered was here where these risk reward tools were. I had multiple entries around these prices, but I'm only going to add 2 risk reward tools at 2 entries that I had, just because it's easier and won't make the screen entirely too messy. So essentially, as you can see, I was expecting from this point in time to go straight up, but it didn't. Partly it's because the time it was before London Open, it was before the news happened, and this and that wasn't timed right. But as a result, I ended up having to close because I was at my full risk exposure here. So as you can see, prices didn't go up, they went down. And in fact, they went all the way down. I would have got stopped out on my original stop loss. And then the move obviously happened. It pushed bullish all the way up to that resistance level. With all of that, this is what I did. Had I not closed, I would have taken a 2.5% loss. I don't necessarily want to take the full loss that I have allotted for myself, because one, if I have to trade again, if this move happened, I didn't catch it, I ended up catching it the next day over here when this happened on Wednesday. But you don't want to take necessarily a full loss. You can, that's fine if that's your plan, but if you scale in, you don't necessarily want to do that because you have to manage your positions, and a lot of times you might end up taking a bigger loss or your normal full risk allotted for that trade, but getting stopped out earlier. So I ended up closing right here on this bullish candle where I saw it closed massively. I'm sorry. So I ended up closing right here on this bearish candle, closed with no wick and a huge top wick, and then obviously closed with a lot of bearish momentum, and then pushed down once more before making a wick on the larger time frame, and before making a wick on a higher time frame and pushing bullish, as you can see. So this is what I did here. I noticed a few things that weren't looking correct. As you can see, this huge bearish candle in the 30-minute, that should not happen. It should be looking like this right here over on the right. So as a result of that, that's why I closed. There's a few other things. Market structure was not going higher. Market structure was not making higher highs and higher lows. As you can see, there are higher highs and higher lows being made right here, up until this point broke and it made a lower high, up until we hit this major point, this major level down here, and then she took off. So a lot of times the market will do this. It will push, it will go in your favor, you're expecting the move to happen, and then it comes back and will either stop you out or come back to that nice entry point that you had and then take off. It's okay if you have to manage your trade early and you end up losing it before the move actually happens, because if you're fast enough, you can actually still catch the move if you're attentive and you're on the chart still and you're looking for it, trusting that the trade idea might still play out. It just needs a second chance. So you're waiting. After you get stopped out, you're waiting to identify certain things, like, okay, so it could still be bullish if this level breaks where this black line breaks. If this level breaks where this black line is, that would have made everything bearish, because this is the major point that was holding it up. So if that broke, it would have made a lower low point and continued bearish, but it didn't. It held. a strong bounce from it, came down again, then bounced off once more, and ultimately created a reversal off that level. So if you're able to manage your risk early on these trades, or end up taking your full loss on a scaled in position, which is fine because you had more risk on. So naturally, you have to manage your risk every single time. You can't control the trade outcome. You can't control the trade process in terms of the price action and where it goes and how it moves and fluctuates. But you can always control your risk management. You can always manage your risk very effectively. That's completely up to you. There's no variables in that. The variable is you and how you execute and whether you're consistent with executing and managing your risk and being disciplined and this and that. So moving on, we're going to go to the trade that I won on this, and I did have multiple scaled positions on this. So this I took this loss right here. I had to manage my risk because I was scaled in. It obviously came down. Had to close this early, else if I would have just let this run to here, I'd have taken like a 3 or 4% loss, and that's way too much. And so that's why you got to manage your risk early on, even though the idea still might play out. If you're going to use more exposure, you have to manage your risk accordingly. But the next thing is, so I caught this move over here. I entered, it had a lot of fluctuations. I did not get stopped out. This actually isn't even the right placement. That was like this. This is a good risk reward trade. And I had also entered, this is the first entry I had. It was on Tuesday, the day before it happened. And I identified that this move will still happen, just have to hold out this period of time. That is what happened. Once I identified this right here, there's a level here, there's this wick here that formed, and I'm about to draw this zone on right here that I saw. Right there indicated to me that the market was officially bullish now because there's structure that was broken and being created. So we see this little high that was made, a little tiny higher low, higher high, higher low again where it wicked off from, and then from there it never came back down and just continued making higher highs and higher lows till we broke out bullish to the upside. So using this knowledge and understanding this, I'm going to remove these arrows real quick. So applying this risk reward tool here, I actually bought on this exact wick. Actually, I did buy on this wick. I was using the 5 minute for an entry, but I had moved the stop loss there. I'd moved this stop loss here, and that's what happened here. So I'm gonna go down to the 5 minute. So I entered right there because one, that wick, two, identified this bullish candle, which is what created that wick. So I seen this pushing down, then snapping back in, indicated to me, okay, that was the wick being created. We're going bullish. That's a great time to buy. So that's what I did. I also added another entry here where these wicks are. I'm gonna catch that as well. And how I caught that was basically the same thing, but knowing that I already had this much risk on, I was a little nervous to do so, but that's fine. But my stop losses went up really tight to like that. They were very tight. So at this point in time, once it pushed, as you can see, it had a little bullish push here. Okay, so using the price range tool here, you can see that there was a bullish push, but it ended up coming back down. And this is the point of the trade where I was nervous, because you can see I was scaled into it. And I think in hindsight, next time after like back testing and looking at this, I will close up here when I notice this little structure breaking. Because if it was going to continue, it would still be making higher highs and higher lows as such. It wouldn't have done that. It would have just, continued up, but it didn't. It broke this little structure point, then had to come back down to this major breakout point before ultimately pushing up to that resistance level. So although I didn't close, I wasn't necessarily wrong, but it's depending on how you want to trade. And ideally, this would have been quick and easy, push in your direction, close. But instead I held this, came all the way back down, and this is why I was a little nervous, because I was like, okay, well, I could have just closed for 3 to 4%, but now we're back at break even to slight drawdown, a slight profit in this range. And this is where psychology comes in, and trusting your analysis, as well as accepting your risk. because at this point, it very well, you know, it's always possible it could have just broke right through, and I just got stopped out and been like, wow, all right, you know, that's the trade. And that could have been unfortunate, and you would have taken a loss, even though you had the opportunity to get out in a profit up here. You know, that would obviously not be the best situation. That would kind of suck, to be honest. But it is what it is. However, if you do trust your analysis, you often get rewarded. But it depends on how you trade and how much risk you have on. For example, if you scaled in all the way up on this move and you let it come back, you know, for example, you bought, you know, this low too, and then you bought this low as well, you know, and you see it coming back and you let it come all the way down, that's how you blow an account. So you got to be closing the trades as the market is moving. You got to adapt to the price action. So anyways, the market came down, ended up pushing back up, and this time it extended even higher, but I still didn't close because I was targeting this resistance level here, and as you can see, it did, but there was a lot of volatility in that point in time. Went up 25 pips, came back down 30 pips, then finally, you know, went up and pushed up the remaining 35 pips up into that resistance level here. Then right after that, it literally dropped, because this was based off of news. This was the FOMC press conference, I believe. And then after that, it just dropped and then completely shot up, slingshotted up. Sucked a lot of people in for these sells and then faked them all out and pushed very bullish, and it created a large wick on this higher time frame here, as you can see. But that is an example of how I managed those open positions and the trade still won. The stop losses were very tight, very tight when I had moved them up, and on this retracement I did almost get stopped out. It was very close. I believe that moment it was like between 3 and 5 pips. Like I was right there. I was like, man, that, you know, I was in my mind. I was like, wow, this sucks. I could have just closed, could have had a decent profit for the day, called it a day, but no, now it came back. And now, you know, should I have adapted? Should I still hold and see if it goes? You know, all this stuff goes through your mind when you're trading, when the outcome that you're expecting doesn't happen, which is why they always say be flexible in your expectations but rigid in your rules. So if you're rigid in your rules with your risk management rules and stuff, and scaling in and taking profit, you need to be flexible with your expectations, because stuff like this can happen. As you can see, the move still obviously happened, went all the way up and hit and even went beyond. But what happened first? A lot of different things, a lot of different volatility, a lot of different fluctuations. So depending on the way you trade, if you just bought the low and hell, then you could have done that too. But it all really just comes down to you and how you want to trade ultimately. Neither of those situations was wrong, holding through it and trusting your analysis, or taking profit and calling it a day. Either one is fine, but it comes down to your decision and you sticking to that decision and accepting that outcome, win or lose or break even, you know, because that was your decision, that was your plan. From there, whatever the outcome is, you study and learn. If it was a loss and it came back and you're like, okay, next time, obviously when you scale in the max exposure and you see it coming back, you got to cut it, take your profit or your small loss or whatever, and then look for the next opportunity. You have to brush it off. You can't get attached to these trades, because that's what makes you emotional and causes you to make emotional decisions instead of making calculated, good trading decisions. However, if you did win that trade, for example, on this trade I won, I just told you things that I learned by watching this. Like, okay, next time I'm definitely going to close when I see a little break like that, a little minor structure break, or these bearish candles when it's about to happen, and just accept the outcome of the trade. Accept that it didn't go right then, take the profits that I made, and just call it a day. Because this whole thing gets really stressful. You know, I'm not a huge lot trader yet, but imagine if you had 10, 20, 30, 40, 50 lots on this, or, you know, you had a 10 lot here and then you got in with another 10 lot on this push and it came back. You know, that's a lot of money that just is suddenly gone that you could have closed for. Now that's a lot of stress. That's a lot of psychological strength it takes to be able to hold through market fluctuations like that with such lot sizes. So if you're not thinking that eventually you're going to be using big lots and large capital, then you need to change your mindset, because that's why you're doing this, to be able to make big money eventually, or at least that's what I'm doing this for. I don't think I'm going to be just a 1, 2, 3, 4 lot trader forever. I'm, you know, trying to be trading $500 a pip, $1,000 a pip, $2,000 a pip even, you know, like trying to make some big moves here. So you got to be having that mindset. you're not going to be a small lot trader forever. So what do the big fish do? They manage their risk and their trading positions very, very well. They're not attached to these things. They accept the outcome of it no matter what. They're flexible in their expectations, and they always manage their risk. Most of these professionals, almost every single one that I see, they're all scaling in. Every single one scaling in on these moves here. But if you don't get out when you scale in, you blow up. And I showed you guys that in the risk management video. I blew up because I didn't get out at one of these trades that I had scaled into, and then also added to a big losing trade, and that's what happens. Those losses add up and boom, it's over that quickly. I hope you guys are able to get a little insight out of this. I know that trade management varies between all traders. However, this is a way that I do it, and I have found success with and find consistency with. The only way you're going to hurt yourself or hurt your account or take unreasonable losses is by not being disciplined and over risking and not sticking to your plan. If you stick to your plan, accept the outcomes, and always manage your risk, you're going to be fine. But if you don't manage your trades and you're not flexible in your expectations and you marry the trades, you marry your positions, you're going to get burned. Never marry a trade, just accept the outcome, be flexible in the expectations, but rigid in your rules, always manage your risk. Don't forget to like, subscribe, follow on the Instagram, join the Telegram and Discord, and I'll see you guys in the next one. Peace.